Hey everyone, welcome back to Corporate Decoder. Today we are diving into Enterprise Bancorp's latest financial report, and let me tell you, it's a bit of a roller coaster. Not as wild as an amusement park, but some unexpected twists and turns are there, like a surprise pop quiz on a subject you haven't studied. Before we get started, if you enjoy decoding corporate mumbo jumbo, hit that subscribe button and join our Discord community linked in the description below for even deeper discussions. We are checking out Enterprise Bancorp's financial report for the first 3 months of 2025. First up, let's talk about the basics, like the accounting policies they use. It is the same as always. There are some changes to accounting rules from the Financial Accounting Standards Board, which is an organization that sets the rules for financial reporting, but nothing to worry about. Let's check their investments. The investment section is where things get a bit more interesting. They're holding a lot of different types of debt, including US Treasury securities, something pretty safe, and municipal bonds, which are often used to fund local projects. Looking at the numbers, their debt securities are valued at $594.7 million. But here's a key point. A big chunk of these securities, almost $80 London dollars, Bancorp originally paid for them. The CMO bonds, for example, are underwater as much as $47.7 million. The reason interest rates went up. When interest rates rise, the value of existing bonds typically falls because new bonds are issued with higher interest rates, making the old ones less attractive. But management believes they'll recover, so they aren't too worried. The problem with unrealized losses is the possibility of them becoming real if they needed the cash suddenly. Moving on to equity securities. They have about $9.2 million in equity securities, and these investments are subject to market changes. And for the period we are looking at, they actually saw a $301,000 loss on these investments. Ouch! The previous period they had a gain of $465,000, so that's quite a change. The loans are the bread and butter of any bank. Enterprise Bancorp has a loan portfolio of about $4.5 billion, and as expected, they have an allowance for credit losses, which is money set aside in case people don't pay back their loans. After setting aside the money to cover potential loan losses, they get a value of about $399 billion. Their portfolio is mostly commercial loans, but they have residential home equity and a bit of consumer loans in there too. Diversification is always a good strategy. Let's talk about loan quality and the risk ratings of these loans. Here's where it gets interesting, from good quality loans to special mention loans that require closer following. The picture seems normal enough. The process for figuring out the allowance for credit losses, or ACL, which is the amount of money set aside to cover potential loan losses, is very complex. Let's quickly check cash flow, since that is so important in finance. They get $5.4 million from daily operation. Cash flows were mostly increased with a significant increase of deposits. Then the last balance of cash and cash equivalents is $86.7 million, so healthy enough. Now let's peek at their borrowed funds or debt. They have various types of debt, including some overnight borrowings, loans that have to be paid back within 4 and 5 years, and other loans with longer payment periods. They also have subordinated debt, which is a type of loan that gets paid back after other debts are settled if the company faces trouble. Subordinated debts have their own risks. Time to peek at the derivatives. Let's be honest, most people don't really know what those mean, but are scared of them. Derivatives are financial contracts whose value is based on an underlying asset or benchmark. One common type is interest rate swaps. Here, what basically happens is one party exchanges a stream of fixed interest rate payments for a stream of floating interest rate payments, or vice versa. These are done to reduce or eliminate certain risk levels that arise. In this section, they confirm there are no big lawsuits that are going to break them. Always good to hear. That's it for the official report, so what do we make of Enterprise Bancorp? It looks like there are some improvements happening, but overall not a clear, strong or weak picture. Here's my take. The proposed merger with Independent Bancorp is a big move for the company, but all mergers are complex, especially mergers in highly regulated industries. And their income is up due to higher revenues, partially offset by higher costs. The unrealized losses can become real if market turns bad, and they were forced to sell those debts. So far, it does not seem too dangerous. One last thing to note, it seems most of the report follows standard procedures and operations of a bank, with minor risks associated with what's going on. That said, there's plenty to keep an eye on with this company. What do you think? please write in the comments below. I appreciate your feedback and suggestion. Be sure to subscribe for more easy to understand breakdowns of complex filings. Also check out our Discord in the description. See you all next time.